Hi all and welcome to our weekly report for the week starting Monday the 1st of July. We have a busy week ahead of us which started with eagerly watched G20 meeting in Osaka over the weekend. US dollar currency crosses, global equities and commodity markets could have a volatile start of the trading on the first trading day of July. Japan, China, UK and US manufacturing PMIs and Eurozone unemployment data is also due on Monday. On Tuesday we get the RBA interest rate decision and UK construction PMI data. Going forward, Australia trade balance, US ADP employment change and ISM non-manufacturing PMI data, in addition to the crude oil inventories, are the main point of interest on Wednesday. On Thursday, look out for the Eurozone Retail Sales. US markets are closed for Independence Day and the week will finish on Friday with US NonFarm Payrolls, average earnings and unemployment rate figures. Now, let's take a look at few markets. This is the intraday price chart for a US dollar index in 4-hourly time frame. US dollar index pushed lower below this rising support trend line and a key trading level at 96.17 as a result of Fed's indication about possible rate cuts going forward. So we saw a flash lower, push down to 95.50, and now we are creating something that potentially could be an oversold bounce back or a continuation pattern if it breaks to the downside. So confirmed loss of 95.50 lows could potentially target deeper downside retracements towards 95.10, 95, possibly even 94.50, 94 to the downside. Bears are in complete control below this area here, which is 96.17, as represented by the sequence of these lows, also rising support trendline and the daily pivot. 200 period moving average is currently at 96.50. Only the spike higher and end of day close above 96.17 and the retest of that level from above as a newly found support could change the bearish outlook, potentially targeting additional upside resistances towards 96.70, 97, possibly even 97.50, 97.80 to the upside. Euro dollar is looking as a fairly decent bullish breakout above this falling resistance trend line, which we created by connecting the sequence of lower highs and a key trading level which is currently located at 1.1317, 1.1320. Euro dollar can also have a fairly volatile reaction on Monday as a result of G20 and as a result of US dollar volatility. So keep an eye on that 1.1320 as a key support to the downside. Pull back to that level and a rally from there could potentially incentivize bulls to engage, potentially targeting highs at 1.14, 14.50, possibly even 1.15, 15.20 to the upside and higher. Alternatively, push back lower and end of day close below 1.1320 and possibly a retest of that level from underneath as a newly found resistance would negate the bullish outlook, potentially targeting 1.1250, which is the level that we talked about over and over again over the past several weeks. Swing lows, swing highs, swing lows, breakout. Confirmed loss of that level, 112.50, would open the way for a deeper retracement towards 1.12, 111.80, 111.10 to the downside. This is cable. Sterling dollar appears to be potentially going sideways. It's ranging in something that could form an inverse head and shoulder pattern with a left shoulder clearly visible here, a head quite visible here with a sequence of low and a lower low, and then we could possibly have a formation of the right shoulder if the current levels hold. The key trading level for us at the moment is at this dotted line here, which would be referred to as the neckline of this inverted head and shoulder pattern at 127.60, which is very close to the 200 period moving average and 4-hourly time frame as well. And this happens to be a fib retracement from the swing high of 3rd of March all the way down to the 18th of June as well. So if we see a rally into that zone and a rejection, then obviously the inverted head and shoulder is negated, especially if we see another creation of the lower low towards 125.80, 125, possibly 124.20, 124 to the downside. Alternatively, if we see a push higher and a breakout and end of day close above 127.60, that would encourage bulls to engage, potentially seeing it as a breakout above the neckline, and then especially if we see a retest of that level from above as a newly found support. In that case, 128.30, 129.15 would be the logical areas of resistance to the upside. 129.15 would be referencing this high here. Additionally, from the market symmetry point of view, if we take the top of the head to the neckline and extend that on the breakout level, that will bring us to 1.30, nice and round number. So distance of the head at the breakout 1.30, breakout over 1.30, could target 131, 131.60 to the upside. Dollar yen is downtrending, it's under pressure. Yet again, dollar yen is another FX pair which could have a volatile start on Monday. The current prevailing trend is pointing to more downside. The price action is creating the sequence of lower highs. It's capped by this falling resistance trend line and also 200 period moving average and 4-hourly time frame. We have a bearish continuation pattern breakout, bearish continuation pattern breakout. This is oversold bounce back, pointing to a key trading level at 108.30. Bears appear to be in control below that level, so rally into that level, and a confirmed rejection at that level would support bearish outlook, potentially targeting 107, which is this low, 106.60, 106 to the downside. Alternatively, only the spike higher and end of day breakout above 108.30 would negate the current bearish outlook, potentially targeting additional upside resistances towards 109.36, 109.40, 110, 111 to the upside. Gold appears to be nicely uptrending. We saw a massive breakout higher on that US dollar weakness. Be prepared for some volatility in gold as well. This potentially could be forming a bullish continuation pattern if the price breaks on the upside and closes above 1420. Key trading level at the moment is at 1400. Breakout above 1420 could potentially target 1434, 1455, 1465, maybe 1480 over the longer period of time to the upside. Alternatively, US dollar strength as a result of a reaction to G20 and a confirmed pullback below that 1.14 area could potentially target this 113.85, 113.80, which would be rising support trendline and also the cluster of these previous swing lows. So pullback into that level would also incentivize longer term bulls to engage, looking for more upside. Dip lower and the end of day close below 13.80 would absolutely negate the bullish prevailing trend in 4-hourly, and that would potentially open the way for a deeper retracement towards 1360, 1356, possibly even 1340, maybe 1320, 1310, 1305 to the downside. Lastly, let's talk about crude oil. Crude oil, we had a massive drawdown in the inventories of over almost 13 million barrels. Plus, during the G20, and I keep referring to this G20, we had a confirmation that Russia and Saudis agreed to extend production cuts for another 9 months. So that would also impact crude oil price from the fundamental point of view, pointing to a key trading level at $60 per barrel. Falling resistance trendline and also R1 in pivots, and also very close to the cluster of these previous lows and highs. Bears appear to be in control below that level, so if we see a rejection at 60, pull back lower, that would negate this current bullishness as an oversold bounce back. Potentially targeting 55.80, 54, 53.70 to the downside. Alternatively, a bullish reaction to an extension in production cuts. We could see a breakout, the end of day close above $60 per barrel. In that case, we could see a short squeeze and a spike higher towards 62, 64, possibly even 66 to the upside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.